Year. Let's ask Peter Schiff, the CEO of Euro-Pacific Capital, who joins us from Connecticut. Peter, Happy New Year, and thanks for being with us again. We've certainly had a crazy good equity markets in the last 13 months or more. What about commodity markets going on so far in the last year or so and going on in the future?
Well, I'm very bullish on commodities, in fact, more so than on most stock markets, particularly in the United States. You know, commodities had been in bear markets up until, I think, just recently. We've broken out of some rather substantial downtrends that had been in place, not just for commodities in general, but for commodity companies. Many of these companies have been heading down since 2011 when a lot of commodities peaked. And we've seen some downtrends break there as well. So as an investor in both commodities and commodity stocks, I think things look very encouraging. But I think, you know, overall, a lot of the inflation that investors were happy to have manifest itself in asset markets like stocks and bonds and real estate, I think a lot of that inflation is now going to finally rear its head in places where a lot of investors aren't going to be happy, especially central banks, when they start to see their inflation handiwork showing up, you know, in producer prices and consumer prices. That's going to be a lot of problems for investors and the banks.
Yeah, although we did have some people on recently, Peter, and talking about how they're pretty bullish on the bond markets going forward. What are your specific thoughts on bonds?
Well, you know, you have a major bubble worldwide in bonds, and obviously that bubble's been inflating for many years, and so you know, the graveyards are littered with corpses of people who have tried to short that bubble. And I couldn't tell you that it's impossible for the bubble to get bigger. I mean, it certainly is possible, but I wouldn't want to be betting on it at this stage. And, you know, betting against it, I know it hasn't been a winning bet, but, you know, at some point that bet's going to pay off big time. And I have a feeling that it's not too far off. And, you know, it's not growth that's going to be pricking the bond market bubble. It's going to be inflation and central banks being forced to raise interest rates despite the fact that in many countries, particularly in the United States, the economic growth won't be there, but the inflation will.
Absolutely. But thank you for that on bonds just real quick. So back to commodities. Let's talk about oil. Both WTI, West Texas Intermediate, and Brent still over 60 bucks. There's about a $6 spread between the two. What do you think's going on now, and what do you think's going to happen in the future in oil?
Yeah, well, I think oil prices are going higher. I mean, we've broken through some key levels. I think once we get really in West Texas, I think once we get above 63, maybe above 70 or so in Brent, I think we can have another major move up, maybe another 20 bucks very quickly. You know, what really drove the price of oil down was not, you know, massive production coming from the Bakken in the United States. You know, it wasn't hydraulic fracking that really did it. It was the huge move up in the U.S. dollar in 2014 or 2015. That's what broke the back of the crude oil market. And I think dollar weakness, renewed dollar weakness, is going to be what's going to send crude prices ultimately to new highs. I mean, the high for crude was up around 140 to 150. And I think before this bull market ends, we will take that high out because it is going to be a function of the dollar. And last year was the first year in 5 that the dollar declined. It was the biggest decline for the dollar in 14 years. It was the biggest decline against the Chinese yuan in 9 years. And I think the yuan could be a big key to the price of oil going forward. I think the U.S. dollar could hit an all-time record low against the yuan in 2018. And I think that will drive tremendous demand for commodities in China, including for oil.
Peter, I want to circle back in case I missed something. I want to make sure I got it right. Did you say you thought oil could break new records?
Well, not next year, but I think ultimately we're going to make new all-time record highs
above
in the
150
price of oil because I expect new. Yes, because
wow.
I expect new all-time lows in the dollar. So if you go back to the dollar index, for example, the low for the dollar index in 2008 when oil was above 140 was about 70. Right now, the dollar index is about 92.
Yeah.
I think the dollar index is going to take out 70. I think we're going to go below 60. And I think when that happens, you can easily see the price of oil in U.S. dollars at a new all-time record high.
All right. Thank you for that. That would be really interesting if we get there, even if it's not in the next year or so, above that high mark from 2008. Okay, let's get to a couple others. I know you love talking about gold, and we love hearing about it. So last time we spoke, I think gold was still below 1,300, but above 1,300. What say you about where we're going?
Well, we're going higher. I mean, we're about 1,320. Right now, but gold prices are ridiculously low as far as I'm concerned in every currency. Gold had a decent year last year against the dollar. It was up, I don't know, 12, 13%, but it was actually down about 1% in terms of the euro. And, if it were a choice between gold and the euro, I'd much rather own gold. I think gold has a long way to go in terms of just about every currency on the planet. I'm surprised that the prices are still so low, but you know what they say about a gift horse. So I advise that people be buying gold, be buying silver, and if you're lucky enough, or you were foolish enough, or smart enough, as the case may be, to have bought a bunch of cryptocurrencies, before the bottom drops out of that market, take those profits and use them to buy some real money, some gold. Don't just hold on to this digital fool's gold.
You never disappoint. Now, before we go, we've only got about 30 seconds, Peter, but, we've had that cold snap that continues, actually, and I know it's impacted citrus. What are we seeing on some of the commodities over there, in particular orange juice, et cetera, at the Intercontinental Exchange in New York?
Yeah. I don't watch it that closely. I know that cold weather in the South is usually particularly bad for, an orange juice harvest. And I think, the growers down there already got clobbered, though, from Hurricane Irma. So, I don't know how much worse it's going to be where you're freezing what didn't get destroyed in the hurricane. But personally, I'm headed down to Puerto Rico tomorrow, and I'll be there through May. So at least I'm finally getting out of the cold weather here in New England. And I think I've overstayed my welcome up here.
Well, you have not
overstayed. A while ago.
You have not overstayed your welcome with us at Boom Bust here. We thank you so much for joining us. Maybe you'll give us a call even from Puerto Rico and report on how things are going down there.
Yeah, well, the next time we do an interview, I will be in my Puerto Rico studio. So we'll
have to set up a news line or something. Peter Schiff, CEO.